index. This is largely because of buybacks that have been going on. They include Walmart, Pfizer, and JP Morgan. Now, remember the name of the game, as you know, don't move the prices. Trade billions of shares if you want, but don't move the prices. What makes it a little tricky is this whole Brexit thing interacting, and we don't know how that's happening. As of now, we're pretty stable. In fact, we have come off of the lows.
Well off, although we're starting to head lower again here with the Dow now down 590 points. So it's possible we close near the lows of the session, which were down about 610 points at that time. And somebody just walked by and said, start thinking about possible margin calls come Monday. That may be a story we'll be talking about then.
That could be certainly an issue. I keep wondering at what point is some of the names getting very attractive. So I'll give you an example. Defense names, Raytheon, Lockheed Martin. These names don't have any real appreciable exposure overseas. Even L3, maybe marginal exposure. They're down a little bit today. I wonder or not the names that are associated with high dividend payers, the Verizons of the world. A lot of the REITs today did fairly well. At least they were flat. Weren't up, but they were flat.
And those boring utilities.
And the utilities, Con Ed, up all day, all up fractionally. PG&E also on the upside overall. So there's definitely pockets of buying interest that's out there. I think the question is whether these beaten up names, not the banks, but things like global industrials are going to get more interesting.
And the VIX, the volatility index, back to almost to those levels that we saw, as I mentioned earlier, back in February and back August of 15.
That we saw back a few days ago, the VIX is surprisingly not that strong here. And we're going to watch here. We're going to do 1,200,000,000 shares on the close here. I know it doesn't sound that way, but we're going to see huge volume at the close here. And the question is, will it move any of the prices? We'll be monitoring that. I'll be on the other side talking about what that is.
We are, in fact, finishing at the lows of the session with the Dow down 614 points. The question is this the Brexit response, or is there more to come? Let's talk about that coming up on the second hour.
Welcome to the closing bell, everybody. I'm Kelly Evans, and Bill Griffith will be rejoining me in just a moment. But here's how we're finishing the day on Wall Street. The Dow going out with a decline of 609 points. That's pretty much right at the session lows today. The S&P closing lower as well by about 75 points, 76 points, 2037. Remember, we had just been trading above 2100. The Nasdaq, one of the worst performers today, looks like actually worse than the Russell on the bell there. It gave up more than 4%, closing just above 4,700, and the Russell, which was one of the sharpest decliners, those small caps for much of the session today, had a huge rebalance on the bell to grapple with as well, and it's closing down 3.8%. And we've got a big show coming up. Scott Minerd is here, Global Chief Investment Officer at Guggenheim Partners. Former Lehman Brothers CFO Aaron Callan will join us, and former Dallas Fed President Richard Fisher will be here too, talking about the UK's vote to leave the European Union and what it means for your money. First, let's get a roundup of today's action. Bob Pisani on the floor here at the New York Stock Exchange. Bertha Coombs covering the Nasdaq. Jackie DeAngelis bringing us how oil and gold finished the day, Bob. People were saying orderly all day, but we did go out right at the lows there.
Sense of real panic, but out of the days, what I'm watching here is this is the Russell reconstitution. They're rebalancing the Russell indices, so there's a lot of traders out here with orders to buy and sell. It's about equally balanced generally, so we're keeping an eye on that. Volume's going to increase. A lot of things haven't closed yet, so that's what I'm looking for. I want to see if there's any changes in prices. The game is don't change the prices. Let's take a look. The biggest damage, you're not surprised to hear, it's the financials down 20% over in Europe, much more contained here, but the double whammy, lower rates and the potential for lower activity, lower consumer activity potentially down the road. Not just the big money center banks, even the regional banks. I was surprised to see banks like Regions Financial down rather noticeably as well. They don't have nearly the exposure you have overseas that some of the big money center banks like Citigroup have. And Citigroup, remember, they rallied all the week. They're only down about 4%, the big names, because of the rally we've seen. Industrials, you've got a problem, two problems. You've got potential for lower sales in Europe, and you have a stronger dollar, a double whammy, and that's part of the problems with this Brexit. A lot of double whammies for these companies. So your Fluors, your Packards, your Cummins, big global industrials typically have about 20% of volume, 20% sales exposure to Europe, all down right in line with the market. Same with the big commodity producers here. Stronger dollar, potentially slower economy, bringing down commodity names. So Northrop Grumman's, your Raytheons have much less exposure, in some cases almost no exposure, overseas. The defense names generally held up better than the overall market. Then you have interest rate sensitive names like utilities, your utility names like Con Ed, PG&E, your REITs like Tanger Factory Outlet, and of course your telecom names. Verizon was holding in basically flatline throughout the day. For the week, believe it or not, for all of this activity, S&P down roughly 1.3%, maybe 1.4%. We're still settling out. So it's the end of quite a wild week, and let me just walk around and check on some prices here and see if anything has moved notably, and I'll get right back to you guys.
Yeah. All right, Bob. Thanks very much. Let's head up to Times Square right now. Bertha Coombs at the NASDAQ market site with some of the big movers there today. Bertha?
Yeah, as things settle out here, it looks as though the NASDAQ is ending the week here in correction territory, down for 3 straight weeks, and a lot of the drag is coming from the big cap tech stocks. Let's not forget, they all do business in Europe as well. They have exposure there. You're going to wonder what we hear in the next few weeks as we start getting earnings updates, whether that's going to be the big thing people talk about, Brexit and the late move in currency late here as we're starting to close out the second quarter. It's the NASDAQ big caps, the NASDAQ 100 that is on pace here, having fallen 4 straight weeks, and it looks like it's going to have its first back-to-back quarterly decline in 5 years. We are seeing chip stocks today. Yesterday, they were the big movers. A lot of analysts starting to get bullish on the sector. There were some technical moves up. If we saw some margin calls today, perhaps this was one of the sources of pain. Some of those big gainers like NVIDIA that hit an all-time high.